Good afternoon, traders. This is Christian from Traffic and Trade Group, and it is Wednesday, June 29th. One more day of the first half of 2022. I keep talking about that because I'm looking forward to the second half of the year. Hopefully things will get a little bit easier to trade. I don't think it's going to be a flip of the switch in terms of things getting better, but knock on wood, I don't know how they could be much more difficult. This year has been very difficult to trade, both on the long side and the short side. I was on Benzinga this morning talking about that. I think today's a good example of that, where we basically just didn't go, for the overall indices, besides the small caps, the S&P, the NASDAQ just really didn't go anywhere. And they kind of, both to the upside, both to the downside, look like they had a possibility of going either way. And, just as it's been this year, you can't really chase too much, right? Maybe chasing a little bit more on the short side has worked because we are in a downtrend and things have kind of gone that way. But it's very difficult. This market has been very whippy. So I'll talk about that in just a second. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer there. Interesting today was the breadth was worse than yesterday. That was kind of one of my questions yesterday, or observations, but that was that the market breadth really wasn't that bad. Today it was bad, and I think a lot of that has to do with the small caps. If you look at the small caps, which I've got highlighted in red, as well as the micro caps, they did, start the day right around flat, and they went down about 1.4%. There's a lot of names in there. Clearly that doesn't cover everything, but you definitely saw some weakness on there. So which kind of brings us to the upcoming events for the rest of the week, which we got this one tomorrow. And I thought that this week was going to hinge on this. Unfortunately, we don't get it to the end of the month, the last day of the month, which is the Pce Deflator. Again, very, not really an out of consensus call here, right? This is one of the gauges of inflation. If the number comes in lighter than expected, so 0.3, 0.4, something along that nature, the market probably rallies. We probably see some short covering, and you go from there. If the number comes in in line with expectations, or if it comes in line with expectations, it's more of the same, right? My opinion, again, all my opinion. And if it comes in worse than expected, it shows that inflation is still running higher than expected. Then then the market probably gets hit again, and we could get back down to the lows in the indices. Maybe not tomorrow, but in the next in the coming days. Again, the main thing about that is what the Fed is going to do. Right. And, Powell spoke today, and there was a panel with other central bankers from around the country. Lagarde also spoke. A couple of things that I heard him say was that he thinks the economy is running pretty strong. So you could argue, you could debate this. Really, it's not going to help you too much in your trading at the, getting upset with central bankers and so forth. That's great to talk about at cocktail parties, but at the end of the day, that's not going to make you any money. I don't know. I don't agree with that. If you look at the GDP coming in, again, the GDP is a lagging indicator, but it still is what it is. It was down 1.6. So I don't know how he could say that the economy is doing very well. We're seeing a lot more companies start to talk about lowering their guidance. Restoration Hardware, RH as they call themselves now, lowered that. Bed Bath & Beyond, which has never really been a good company, but still, that name continues to get hit. So I don't know what these guys are looking at, guys and girls who run the Fed, because it does look like we're seeing some significant slowing and so forth. So this is one of those things where we hear about the possible soft landing or not. Again, I don't really want to get into the debate of that. I'm just mentioning it because the Fed at some point for this market to kind of pivot from what we've been doing this year is probably going to have to change. When that comes, it's when they decide to change their tune. I don't know. and that's something that we'll have to watch in the price action, right? So again, things that you've heard me say in these end of day videos from time to time is being patient. I will go through the indices with you, but you know, my whole thing, and I put this in here too. Whoops. Right, I thought this was a nice post by Sentiment Trader earlier in the day. I don't know what I did with it, however. They were talking about how this has been one of the most, let's see if I can find it in here. Yeah, what did I do with it? Huh. Maybe I put it in the news. Nope, I didn't. Hold on one second, I'll get it. All right, so I found it. I retweeted it. Market volatility over the past 5 weeks is at its highest since 1928, causing a lot of negative sentiment. Over the past 80 years, similar instability coincided with ends of bear markets. So I don't know if I want to really debate that either, whether or not this is the end of this is the end of a bear market. We'll let price figure that one out. But the point that I was going to make here is if you've been hanging in here with this market, right, and not taking any heavy losses, then you're living to fight another day. And one of the most market highest volatility over the past week since 1928. So give yourself, like, this is not but a year, and unless you've been playing everything to the short side, making your money that way. This has not been like a market year to celebrate. This is, for me, and the way I trade in my market system, it's a year so far it's the first half of the year has just been, to basically survive, right, and not underperform as much as the indices are, and just be patient until there's better times to trade. Someone asked me, I think in yesterday's video, they said, how come you're not shorting more? Well, because at the end of the day, the market will go higher. And again, that's not a guarantee or anything. It's just facts. After every, and here's where the fact is, so don't attack me. The fact is, after every bear market that has ever been in the United States, the market ends up higher. Okay, so I know it's sometimes in the middle of it, people want to short, and you could debate whether the market is still expensive or not. So maybe we've got another leg to go to the downside. That's fine. I'll show you my charts, and I've done that probably once a week, where I've talked about levels that we could get, where I think that we could get to on the downside. But at the end of the day, there will eventually be a Fed pivot, and the market will bottom, and you'll probably see a higher market. Now again, debating the timing of that is, I don't have a crystal ball, so you have to be patient with it. But so let's draw out first, right? And then I don't want to make this video too long, but I'll just give this example. So here we are, right, on the weekly chart, NASDAQ, or if you want to look at the Qs, you could look at the Qs. I like NASDAQ futures, but I think 254.70 is a place that we could get down to. I've said this before. We're coming upon the bottom of value once again, right? So we're either going to get rejected here, and we know that the trend is down, right? There hasn't really been, everybody's been looking for a type of capitulation. We have seen in this Qs chart higher than normal volume, but it's not like a peak of volume, right? So, that bring back that capitulation word that everybody likes to talk about from time to time. So it could be 254, right? Which is, not that much further down, I hate to tell you. So that's kind of somewhere in this area is what I'm looking for, or even 245, right? That might entice people to get back involved. Also, the situation will be worse once we get there, and that might incline the Fed to change. S&P, I could see 3,500, 3,300 if we break and the first things first, we haven't broken the recent range. So again, I'm just kind of giving you scenarios because I think it's important to talk about scenarios. And I put out a newsletter, not last weekend, but the weekend before, talking about that we're hanging in the middle, right? We're below value for the year, and we're above these support areas. So very, very difficult environment. So now that we talked about the weekly, right? And that's the bigger picture, right? The daily, what do we know? Well, we're at the 5-day moving average. This is a place that has to be held in the short term. And you'll see that in just a second on the 1-hour chart, but we're also below value for the month, right? Just a couple days ago, we had a real nice Friday. Breadth started to expand, and we've seen this now a couple times this year. Every time breadth has expanded and you start to see more setups, it's been a trap. All right. Now, it's not to say I'm not, I can't say definitively whether or not we're going to break, where we've got a signal to break to the downside, or we can move back up. And where I will find that signal is on the 1-hour chart, right? And that's 3,800. Right? You zoom out. So why is that important? Well, this is the short-term stuff, right? But this is the value area for the week. We've come back in to check in, right? We talked about how that might be a possibility coming into this week, right? It happened very fast, as the majority of the price action happened all yesterday, where there wasn't a buyer in sight, right? But we haven't broken the 3,800 and this 200 period moving average. So it's going to hinge on that not employment, but it's going to hinge on that inflation data, I would think. NASDAQ, right? So you saw me look at the weekly chart. Let's dial it back in. Notice that that's right at the pivot, right? You got a doji for the day. Doji, and we're right at the bottom of value. So you talk about a pivotal point for the NASDAQ, right? And so let me do Qs. All right, so that's actually just a touch below value. Again, a little bit different value area because NASDAQ futures trade a lot more in the after hours, right? So there's just a different volume profile, different volume, little bit different price action, because NASDAQ futures are a bit more continuous, whereas the Qs mainly just trade in the cash market. So that's 285.81. We're below that level, right? And then if we move over to the 1-hour chart, you're going to see that we're just, and interesting, the price tried to get back above value today and just couldn't do it, right? So I don't know if that's an ominous sign for tomorrow, but I think whatever direction this market, goes on the based on that Pce Deflator number, I think it stays in that direction for the day. All right, so that's now, again, if it comes in right in line with expectations, maybe it's another choppy day. All right, but 284.93 and then 278 to the downside. All right, and then the last one is IWM. IWM, like S&P, has been holding even though it was the worst performing group, right, it actually held the value area for the week. So right into that support. And that's one, call it 170. All right. In terms of sectors, right, this is where this market is ridiculous. All right, look at what happened with energy this morning. All right, so I tweeted out because I'm like, this is interesting, right? Crude, crude was above 111.62. So I jinxed it. I sent out the chart this morning. I'm like, I got into the office and like crude was above the value area. Well, notice it got rejected, right? So, that's what happens at pivotal areas sometimes, is either you make the turn, so it could be a lower high being put in here for crude. Again, I'm okay with that, right? I think that crude going down, nat gas going down is actually like, a pretty good thing, not just for trading, but just to help people. Like there's so much on Twitter about, and I get it, for trading, we're all trying to make money in trading, but I still look at the overall outlook. And, if you're, if you're like, somewhat of a sensitive person, I don't want to see, crude prices, even though I ride a bike to work, right? Because it's good exercise, right? It's the best thing I could do, to get to and fro work is to ride a bike. So I'm not spending money on gas, but yeah, I feel for people who are commuting into work and have to pay more for to fill up their gas tank. That's not fun, so I do hope gas prices go down, right? And here's nat gas as well, which was not as strong as crude, but has started to move down. And then if we look what happened in these energy stocks, I mean, that is a nasty rejection there. This is the XOP oil and gas ETF. One of the things that I've been saying, and I said this morning on also on Benziga, was, after you've had a move like this, where something was, like energy was by far, the best performing sector this year, but it was honoring the 50-day moving average, right? And once this broke, it's a different situation when you break this badly, right? And I've been looking and looking and looking at energy companies and like trading a couple here or there for like a quick day trade. Like I talked about I've been talking about the refiners, like that was a super strong group, but I just haven't fallen back in love with them. And I've been waiting for some confirmation. And I almost looked, I said, hey, if these things are gonna retake the trend, I started to look at some of the refiners. I started to look at a couple coal stocks, but this was a good miss not to go long, not to get back involved in these. Now they did bounce a little bit from the lows, but it's a pretty weak bounce at that. Also, if you look at the agriculture areas of the market too, wheat was up this morning too. That was up over 2%, right? So, all of this is going on. Clearly we haven't had a resolution to what's going on in Ukraine and Russia, but what do you think this price action is telling you, right? With what's going on, do you think that that some of the price, I believe that that price knows everything, or knows a lot of things. So, is this telling us that this resolution may be somewhat, either there's workarounds, to get the grain out of, the grain issue, to get that out of, to get that out of Ukraine, or is this this conflict starting to kind of come to some type of, I don't want to say like a definitive resolution, but if things were getting worse there, wouldn't you see wheat be ramping higher? Wouldn't you see nat gas, right? I saw a whole bunch of calls, a couple months ago for crude going to 150, right? It's not even close. Right now, it's still above 100, and it's still, right around that 50-day moving average. Tomorrow, it could reverse and end up going up there, but so that's been acting the best is the crude. So anyway, I throw these things out so that you can just food for thought, right? Because again, sometimes what you see on financial media will throw you off, right? And so anyway, I'll move on. What has been working really well, or the last couple of weeks, is anything healthcare, right? These things have been pretty stable, but right now I don't like this XLV chart, but clearly you can go in and you can look at individual names. UNH has been behaving well. Humana, so managed care names have been doing very well. Humana, which I actually bought some Humana. I was looking at it yesterday. I bought some today. Right. And then the Chinese names cooled a little bit the last couple of days. There was a nice Alibaba call buyer out in September and August. I still like China, right? They're on a different, they are on a different cycle, right? In terms of, easing versus tightening. They are doing more easing, right? They've also been a little bit more lenient to some of the companies. So here's what I did, not much. I was in some NOC. As soon as these things hit my stop price, I'm out. Right. I day traded a little bit of ENPH just because it took out a lower VPOC. This has a chance to turn around, but here's the VPOC takeout. Again, nothing really moved that much because it was a very, very choppy day. What else? So I added some BABA today. I added a little bit of Humana. Again, like I'm sticking with the strength right now. Jazz, which was a name that I think I tweeted out over the weekend. or if not, it was a weekend setup. I think Jazz can get up to 162. This is Jazz Pharma, and again, everything has a defined stop. That's the last thing that I'll say. Before, regardless of what happens tomorrow with the inflation number, but in my opinion, if you're not trading with, if you're not knowing where you're going to take profits in a trade, as well as where you're going to get stopped out. I mean, this market is all over the place. So that is a major point that I would say is being a risk manager has kept me alive this half of the year. Again, my numbers are not great. They're not impressive for this year, but I look to really counter on what the rest of the year brings. Right. And I'm optimistic about what the rest of the year brings, but patience is the key, and to wait for some things to kind of improve, right? We just like I said, Restoration Hardware just lowered their guidance. So how many more companies are going to lower their guidance going into this earnings cycle, right? So I think at this point have to rip the Band-Aid off, and then get more bad news out there, and then maybe we can begin to absorb some of that bad news and go from there. All right, guys, that's it for today's video. Hope you're doing okay out there. Everybody have a great night, and I'll see you tomorrow.